Hello guys, glad to have you on board again today. Sorry about the usual delay, but to be really honest, I'm kind of reaching out a burnout level of amount of work achieved on a day-to-day basis. So I take care about my health condition, so I kind of slow down for obvious reasons. I just don't want to burn out. So I'm sorry about that. Some of you may have noticed that it's kind of usual that week about delaying or canceling the podcasts. So I'm really sorry. I just need a few days to just slow down the pace because the indicator update's been quite hell of an amount of work. I'm basically working 7 a.m. To midnight for 3 days in a row, and I kind of need some time to slow it down, because otherwise I can't make that happen on a day-to-day basis for too long without driving myself crazy. So anyway, I'll release the indicators pretty soon, but it's just, please don't mind me about those delayed podcasts and things like that. I just do everything I can to handle things in time, and that's pretty much hard to do right now. So anyway, today we're just going to talk about the Wednesday show, which is putting some educational content out there and reviewing some trades you might have shared on the Discord to me to see if you've been correctly applying the strategy, or if you have made some mistakes that you can learn out of to get yourself better the next time. But first of all, we're going to have to make a quick screen review, 5 to 10 minutes at the beginning of that show, just to make sure that things are well understood and put it in context, because we had lots of things that have been moving pretty brutally yesterday, and obviously we had to cover them up. So first of those, Bitcoins and cryptocurrencies in general have been reversing, and the reversal is confirmed today by that nice bearish candle close. So don't overthink things at the current time, as for now we're still trading a long-term support area, and that candle is just one out of many bearish candles that just stopped just right here. I mean, look at that. Last time we've done something similar, just ended up like nowhere. So I would say wait for this. If it keeps on going to the downside a couple more days, always closing at the low of the candle with a rising volume, that should be a kind of a concern. But look at that, the volume is really kind of still nothing at that stage. We're just here, so half yesterday volume, and we're past half of the day. So it isn't really a concern to me, at least not right now. So we'll see if it keeps on going down in the following days. That's a possibility. That's part of what we were possibly expecting. Yep. The thing is that I just remind you the Bitcoin scenario, because I pretty much bet that most of you guys are kind of scared right now, thinking that this will collapse and everything like that. It's expectable somehow in terms of Bitcoins themselves. I remind you that you need to separate Bitcoins and Ethereum in terms of scenarios to me. I have a very tiny confidence when it comes to Bitcoins, because basically I just don't even know what's about to happen in here. Volume is dropping as well as volatility is. And when you have that combination, it generally gives me very few confidence about what the market should do right after, because I tend to like trading in volume. When the volume is dropping with the volatility, it just basically says the market has found equilibrium price, kind of a balance. Both bulls and bears think the common price is acceptable. Otherwise, we would have speculation. Guys who want to move the price to other prices area, which is not the case right now. It's kind of, okay, Bitcoin's at 6,000, feels like something both the bulls and bears can accept. And at that stage, okay, I feel confident. I think that in the long run, odds are still to have higher prices than lower prices, but I pretty much don't know. And I think, yes, 6,000 is kind of a balanced price, acceptable in both camps somehow, which is not the case when it comes down to Ethereum, in which the pattern is quite different. Out here, we've got strong volume on that support area, showing speculative actions. Guys like me And generally, guys like me tend to buy supports and not selling supports. So when I see prices reaching out to support area and I see volume rising, kind of suggests that I think speculators are buying right now. So I have kind of a confidence that other guys like me are doing the same. That doesn't mean we're going to be right or wrong, because speculation don't comes down to this. It really pretty much comes down to either this is a good timing to buy or not. If this isn't a good timing to buy, then a lower price further from now is going to be the next timing I will take for speculative entries. Obviously, this is just because, you know, in Ethereum, I got two underlying scenarios. One that is a swing buy and hold, long-term trade, in which I'm not going to change anything. Either it goes to $1 for Ethereum, I don't give a shit. I'm not going to release those buying entries until we stay below $1 for 2 years. Okay? And this is the only scenario I will release those Ethereums and basically just keep them without any underlying value for them. So if it goes wrong, I'm ready to lose that money. That's part of the scenario for the buy and hold. It's not part of the scenario for the speculative entries I made on top of them, which means if we had to go to $1 on Ethereums, I obviously don't want to let the speculative entries go into those prices. So we're going to define a limit, and we're going to do it using the indicators. You've been seeing that I've been pulling out the sine waves and things like that, because today we're just going to take care of one single way of analyzing the market, because from the way I can see, most of the mistakes that you guys are doing right now applying the strategy always comes down to contextualizing the market and finding the right prices and technical framework to get into searching for signals. I think applying the strategy of double signaling to get in, I think everybody is good enough to do it and smart enough to just see two indicators showing signals. So I bet you're all good at doing this right now, but you're just lacking a lot of information when it comes down to identifying the context and the interesting prices to trade. This is the reason why I've been coding those indicators recently, to help you that way. And so we're going to just use this today, and it's going to be today's topic out of educational content. So even if we're talking about trading scenarios ongoing right now and swing trades, we start putting out the educational content. So how do we find limits in terms of context? So when we do trading here, the context clearly is bullish. The indicator says price okay, so you're looking at buying entries in here on that time frame. And the technical framework is going to help me somehow, because if we go down 2 hour chart in here, if we stay in the daily chart, in here we can clearly say the last time the lowest boundaries we've managed to get out to in terms of technical framework was in here, $137. So I would say in here is an acceptable level, maximum level to reach out to. So I would say if we manage to make daily candle closes below $130, to me it will be fully invalidating the speculative scenario. At that stage, it simply means that the bulls are no longer in control, and those who have been speculating out there are kind of been wrong in timing. So I would say going in there, multiple candle closes, I will kind of invalidate the scenario. I think I'll take probably partial losses if we make a daily candle close below that low. At least I will have a look at the price structure. If we do have bearish breakdowns and things like that with targets below $130, I'm probably going to have to reduce some of the to sell again some of the bought Ethereums I made for the speculative entry, and buy and hold is not going to change. Anyway and anyhow, I'll still have 5K of buy and holds in Ethereum, and I don't give a fuck about the price until 2 years from now. All I'll do on those buy and holds is taking profits if we go to resistances, or nothing if we keep on going to the downside. That's for cryptocurrencies. So basically wait for this. Don't panic. Everything suggests the Ethereum is just making a short-term pullback. We might try to break those support, this one, just to fuck up some stop losses and trying to find some stupid bears to sell at low prices. But that's all it's going to be to me. Okay, what I would like to see is the market trying to drop and volume rising once again, and then prices reacting to the bull side again. This is what I'd like to see. Anytime we go down, volume's rising, and that's a good sign. That's what I want to see. Anytime somebody sells, we've got speculators to buy them out in a longer time frame perspective. Okay? So don't panic. But we got lots of things to talk about today, and we're going to start right away with DXY. Yes, fuck it. I think we got it. It still needs confirmation out of today's close and probably tomorrow as well, because the big part of US catalysts are tomorrow in terms of dollar. So tomorrow is going to be the answer. But today and yesterday particularly, we had a great sign, fucking bearish engulfing pattern on the dollar, right after trying to break a stupid resistance level that I never thought would be breakable. So we'll see if it confirms in the next few days. But if that market reverses, we could install a bearish momentum. So I'd like to see the momentum breaking down that trend line. That will be the best case scenario to confirm that we're done with that shit and that the dollar is not ready to break that resistance, and moreover to return back to the support area and break it down as well to reach out for the support context. So that being said, still something we need to watch out for. And obviously, yesterday's close has been done with a crazy minus fucking 6%, a downward move on US oil that is mostly reversed today. So kind of suggesting as well that we've got a double effect of fake breakup on dollar that's been helping downside on US oil plus Donald Trump shit and whatever this is. I mean, it's really a brutal move. Yes, we're on support area. I remind you that in my long-term views, this is a price I wanted to buy. The thing is that the way we got ourselves out there is really fucking brutal. So I don't want to buy a falling knife. Just, it's part of the plan. Buying out here really is part of the plan. But I don't want to do it. I think it's way too aggressive. I'm probably going to buy on shorter time frames breakups eventually. But right now, it seems really too dangerous to buy a market that basically lost 30% in a month. It's an enormous drop, and I'm not ready to keep on going that way by just trying to buy a market that is falling so brutally. So as for now, I kind of will search for more buying interest than selling interest into US oil. I think right now it's just not a context. I will contextualize that market into emotional market. It says basically, to me, it's too much bearish to buy. And I would rather like to see that market stabilizing for a bit, even if that means that I have far worse prices than the one I would have got if I bought that Fibonacci level. That was the plan. And yes, I say rather like waiting in here seems more like a risk management than getting in and trying to go aggressively, paying the support level all by itself. All right, so aside from that, I think we all have to talk about the damn AUDNZD as well. Back into long-term support. What the fuck are we doing in here is kind of a nonsense to me. I really don't get it. I can't say any different. It doesn't make sense to me. We should be bullish, and we are not, which is kind of a concern at that stage. I really wonder how long this is going to last. If I have a look at this in the daily chart time frame, yes, today we might have done something, but until we manage to have a lower shadow candle with a momentum signal, I don't want to buy this. We shouldn't be there. We should have found support near that Fibonacci level. I accepted the market to go slightly below to take stop losses, but today I want to see the market recovering from there and making a daily candle close above the previous support. So I want to see the market closing high today with a lower shadow candle and making bullish engulfing pattern tomorrow. That's the only solution for me to recover and restore bullishness in that market. If I don't see bulls buying in here, where the prices are the most interesting they've ever been for almost 5 to 6, last time we were there was June. So we're probably 6 months in for interesting prices. We shouldn't have gone that far. It's probably the last time we're reaching out to support area, so I want to see a huge demand in terms of bullish activity out here. I want to see strong volume today, and tomorrow I want to see the AUD showing some strength. Finally, we got USD AUD catalyst tonight during the night, overnight. I want to see fucking bullish reactivation from AUD. It's been lagging the NZD for too long right now. That game has to stop if the overall scenario is the one I'm trading, which is normally we should see AUD overperforming and NZD in the next few months, the next few semesters. Actually, it's a long run scenarios in there. All right, so watching closely for this. Today is going to be an interesting close for AUDNZD. I don't want it to close like that, and if it does, I want to see a strong bullish invalidation tomorrow with a daily candle close above 2 days high to make sure that we've made a piercing line below that Fibonacci level. But I certainly don't want the market closing like that today and confirming it with another down day tomorrow. That would be the worst ever scenario. That's it. And if you think it that way, I think it's something I'm going to update, because right in here you can see the context should have been rising. We've been breaking the highs in here, so it's an algorithmic thing. So I'm going to add an algorithmic rule in here and correct that mistake. But normally in here, the trend channel in here should have reversed to the upside and should be going higher in here. So we should find near those prices some long-term support. Okay, some context support. So it's just a mistake from the indicator, something I'll just have to correct right away. But consider it that way. It's going to be changed by tomorrow. I just have to add a new rule for this. All right, now moving to today's educational content and switching to. So thank you guys for posting your messages. So Borch just tell me this is the trade on Tesla to comment on Wednesday. I can see that Tesla is a range and we're now in the upper boundaries on bear signal and bear momentum trigger. I open a short entry with low leverage. If 2 times is low leverage to you, I think you and I are not in the same page in here. Low leverage comes to adjusting your leverage to the volatility of the underlying asset. You know how fucking volatile is Tesla. So 2 times leverage. Let me just be clear. I'm going to move to Tesla. Where is your stop loss when it comes down to trading range? Okay, of course, I'm agreed with you taking that trading range scenario, and I agree you searching for bearish signals in there. Problem is the stop loss has to be set in here. I'd say $410 as at least. And you know about that $420 target that Musk have been saying. So the market may just try to get there just to, prove a point. So I would say putting the stop loss in here shouldn't be done in here. So I would say, if you want to make sure not to get fucked up in here by some speculators, I would say you put the stop loss in here. This is the region where maximum stop loss should be there. Of course, if you want a tighter stop loss, it's going to be there. But anyway, even the tighter stop loss is going to cost you 12%. Leverage by 2, which means on a single trade, you're ready to lose 25% of your capital. You and I are pretty damn far from being agreeing. Okay, this is not possible. To me, even for those who have tiny amount of capital, in which, and I've been clear on that, I understand that you have no choice but to use leverage, because otherwise you just win pennies. Okay, I'm okay with that, but there are certain limits anyway. You can just do everything. There are some boundaries, and you're far beyond those boundaries. 25% risk on a single trade, moreover, on a fucking volatile asset like that, is way too much risk. I really don't agree. You don't put yourself into leverage 2 in here. Leverage divided by 2 it seems more like an option to me. And you're risking 5 to 6% loss if it goes wrong, which is way too much for a highly speculative scenario. Moreover, in a range that is pretty damn fucking mature. Because at that stage, look at how many times we've been touching the boundaries. As more as you go into a range in terms of duration, the more and the higher the risk will be to get out of that range. The market doesn't like ranges. The market is waiting for something to happen inside ranges and wants to get out of those ranges anytime soon. So at that stage, the risk is higher level than ever inside that range. And moreover, you're going to add in top of that a 12 to 25% loss. It's really out of boundaries and way out of boundaries. Sorry, I'm going to get back to Discord. Sorry about that. All right. So, I don't agree, even though, yes, in here, you're in the technical area. Everything's fine. If you have a double signal, take it. But really, position sizing is out of boundaries in here. And then we've got Gen Z. Yeah, Hi, mate. Glad to have you here. Let me just open that link. Okay, great job. Great job. I like that. You put yourself an effort out there. So it's NASDAQ on a daily context. You say bearish range before crash. Sounds really well to me. That's pretty much what I think. So I would say 10 out of 10 in here. So I just can figure out reading. Okay, it's right in here. Okay, so this is your technical framework. So you're using, God damn it, I can't find a word. It's harmonic patterns. Yeah, sorry about that. So you're using harmonic patterns. So yes, sounds like a legit bullish cipher to me. So yes, it says bullish activity if we go there and find some bullish confirmations. So you can take that bullish trade. I'm agreeing with that, and I think we've done that today. So I would say yes, valid for bullish reactivation of the cipher. To me, the target will be slightly lower. Generally, I'm targeting 61% retracement of this. So I would say going from NASDAQ, so we're going to use NASDAQ 100. So NASDAQ 100 USD. All right, you are in 2-hour chart framework. So yeah, perfectly, we've been reactivating where you were expecting. So your cipher is now completely acceptable. So I would say great. Okay, you've got it right here. Nice cipher. Okay, generally target is 61% retracement of that leg. Okay, so you can consider generally that you need to sell in here. So I would say take a wave 2 target. Okay, so I would say in here is where you take your profits, 71 to 76%, and this is where I'd probably get bearish again myself. So I'm not bearish anymore into NASDAQ. I just wait for this to get to its target. So I'd say pretty damn good job. You buy in here, but don't forget to take the profit in here as you said. It seems to me like a bearish range to me. So I would say the most interesting trade to take is eventually taking the buying entry out there, but mostly taking the bearish entry that we could have if we manage to retrace to the targets. So searching for something in here seems more like the trade I'd like to take. But in a range context, you can you can both buy the lows and sell the highs. Just I rather like to sell highs and buying the lows, even though in here I'm agreeing that you have a technical signal. So great job, great. There's nothing I can tell. Just done great context analysis, great technical framework. You just wait for a signal, and I would say great. You apply the strategy out here. So it's a 10 on 10 to me, and it works just fine. You got the signal to me. It's a taking profit pattern on momentum right into the expected context. So I would say okay, you're good to go. So to me, that trade is valid. It's got double signal in the expected price area. As you can see, you're using your technical framework of harmonic patterns. I'm using another context, which is my framework indicator, and we both come to the same conclusion that we can buy that area. Okay, so moving on to other educational content today. We're going to push it a little bit further because I've been analyzing all the messages you guys send me on private messages, emails, and things like that. And I always come to the same conclusion. I've been doing this long ago, and I see the trend out there. So I'm just trying to help you guys getting better at applying the strategy. And most of the mistakes you guys are doing are generally the same. You're all having and facing problems identifying their contexts and do it well. So this is the reason why I've been building that indicator. I'm not the kind of guy who builds indicator just to build indicator. I don't give a shit about that. I'm a trader, so I'm not here to sell you indicators. I don't have tons of indicators to sell. I just use those fucking indicators myself. So the thing is that the context indicator I think is going to add quite some value to the strategy in here, because it's going to help you getting better at applying a context and a framework to the prices you want to trade, because most of you guys are just searching for double signals in prices area that doesn't even make sense. So it's going to be simple, but today we're going to make a tutorial just out of it, just like we've made yesterday. Yesterday I made an introduction video, so we're going to do the exact same thing as yesterday, take some actual example of real market conditions in which I'm going to try to highlight what you should do in those contexts. So I would say in here, first thing first, when it comes to NASDAQ, we're going to use it, okay? If you have a look at this, I've been deleting everything. There's no sine wave I'm going to hide momentum. Just remember what the strategy is. Before you even get to look at the indicator signals, either momentum or sine wave, you want to do one thing. Having a fucking look at the context and make sure you're trading at a context interesting price and then technical framework price. It's a multi-time frame analysis, and since the latest update, you can make both in the same chart, okay? Sorry, I kind of locked myself in here. So anyway, right in here, as you can see, you always, today's educational content is how to use that indicator, okay? So you're going to scroll time frame. Think about the market as multiple layers. Just if you want to respect the strategy, just make sure that between two layers, you got approximately 6 to 8 times the lower time frames you are referring to. So 2 hours, daily is okay. Daily, weekly is barely okay, but you still have to choose time frames that make sense. Which means when it comes to trading daily, the higher time frames really sounds like being weekly, as well as weekly and monthly. So you've got to use time frames that make sense. You don't want to trade something like 12 days. Doesn't make sense in terms of market timings. The market trades in weeks, in months, in days, and things like that. It's when it goes to intraday that you need to use time frames that make sense as well. 15-minute time frames. All the intraday traders knows about that time frame. And then you can choose 2 hours, 4 hours, 3 hours, kind of pick one and stick to this one. And I've been personally choosing 2 hours because it works fine. So if you, as generally you guys are using my strategy, I suggest we all use the same time frames. So it's easier for everyone. So I would say 2 minute, 15 minute, 2 hours, daily, weekly, monthly, and 3 months seems like a context of time frame that we can all use to make sure we're all using the same things. Okay, and then you can trade on any time frame you want. If you're an intraday trader, you're going to use 2 minutes, 15 minutes, and sometime 2 hours, but you're not going to trade higher time frames because you don't care about those. If you're a swing trader, you're going to take care about 2 hours daily, weekly, monthly, and no more than that, no less. You're not going to give a shit about 15 minutes and 2 minutes. And if you're trading all those time frames like I do, then you can have a look at everything. Okay, but generally what you're going to do is just going to scrolling prices and see where you got. And I've been coding those indicators. You know, this is a higher time frame. You see, in here with 2 hour chart time frame, this is daily. Okay, so I've been using those gradients as well, those layers when building the multi-time frame thing. Okay, so there you got daily. This is weekly. So you can basically scroll the time frames one with each other and make sure, because what you're seeing in here, okay, that channel in here, so the technical framework we're using in 2 hour comes from daily. The context we use comes from weekly channels, okay? So it means you can switch, okay? Because what you have in here comes from daily. And daily is going to be the context of 15 minutes, okay? This is the exact same thing as this. Okay, we clear on that? Which means you can switch the layers. And if you see that you are trading the technical framework of 2 hour chart, means that you can take this for trading signal in 15 minutes. Okay? Because in 15 minutes, what was the technical framework in 2 hours is your context here. So here you can check step 1, price is okay. Are we fine with that? You get the thing, okay? We're buying right now. We're searching for signal in 15 minutes because this is where we respect the strategy. In here we've got step 1 checked. Now we need to move step 2. What is step 2? Even before having a look at sine wave and momentum, if you are facing that issue, that is a really common mistake that most of you guys are doing. When you go to a time frame, when you go to a chart, you're first reading the signals, which is the absolutely biggest mistake you could make. Remember, the strategy has been clear about that. Step 1, making fucking sure you're trading a context price, interesting context price. Second step, make sure that you're trading a framework that makes sense. And to do that, you need to make sure you're trading below 50% of the trend channel. Okay? So you can use this, the 50% lines. There it is. You can't fucking buy if you're not below that line. You can't fucking sell if you're not above that line. And you need, the most of the time, to try search for signal in the technical framework, so at the boundaries. But the minimum is to make sure that you're in the lower boundaries, okay? And as close as possible to the lower boundary means that the prices are the most interesting to trades, okay? So for example, if you're trying to sell, okay, you're here to sell a signal in here, but it's going to be much better if you sell this one, because in here you're in the technical framework limit. Doesn't mean the price can't go higher. It can. It's just you need to get a fucking signal, and that signal must be done above that level and as close as possible to this. All right? We clear on that? When you've got a bearish trend channel, means you can be aggressively bearish. When you've got bullish trend channel, means you need to be aggressively bullish. We're trying to buy, which means when we've got bullish context, you can buy. So I give you 2 seconds to answer. Even visually right here, not even searching for signals, where are the price that the signals must have been traded blindly if they were giving a signal? To me, there are 2 prices. In here, and in here. Damn it. And in here. These are the 3 prices as a buyer. And remember that when you apply the strategy, you need to have a bias. Okay? You're not trading whatever you want. You're trading something that makes sense. You're only looking at buying in here. Or the selling signal, you just don't give a shit about them. You're just looking at buying signals. These are the only 3 prices you might want to search signals into. If there are signals in any of those 3 prices, you take them for a single reason, because this is where you are in the context and in the bottom of the technical frameworks. These are the most interesting prices you could have gathered in here, but they needed a signal. All right, so now we move to the next spot. I'm going to add the signaling. No, we're not going to take care of this. We're going to stay focused today, okay? Just really focused. These are the prices you want to search signals out of, okay? And now we move to a different asset, something that we haven't been analyzing for a moment. For the French users, we've been doing the GPN. We're going to do the FTSE. We've been doing it as well. So it's something that we haven't analyzed yet. But we're going to do another interesting example. Pascal,
yes.
Can you give me 2 letters?
TU.
T and U. All right. So we're going to analyze something that starts with TU. Not the Tears Note. We're going to have not the Thai Union. We're going to use, TELUS Corporation ordinary shares. I don't even know what that shit is, but we're going to analyze that. Okay, not in a 15-minute chart, because I don't even know what this is, but this is a share, so we're going to analyze it in a daily chart at minimum. We're going to start wide, okay? We're going to make wide analysis of that thing. Okay, not enough historical prices to analyze, so we're going to do daily, okay? Daily is great. So, big mess. What the fuck is that context? I give you 2 seconds to think. Normally the answer should be pretty fine. When you have that, it's a fucking range, okay? It clearly is. Look at the context. Context bullish, we break it down, but we don't go that far, and we break it up, and we don't go that far, and we break it down, and don't go that far. Fucking range. You take the top, you take the bottom, and you're fine. Or you just do nothing and use the built-in filter, the built-in Fibonacci levels, which is in here, which means all you want to buy is in here. All you want to sell, it's 75 is in here, so opposite, all right? All you want to buy is in here. All you want to sell is down here. Is up here, okay? Buying entry below 26% retracement, selling area above 76.4 retracement, all right? You just take fucking care of that. The rest is none of our concern. So in here, what are you going to do? Range activity, you remember this? You're not fucking buying until you get below that 50% thing, all right? So option number 1, you put yourself an alert out there and you wait. Because in here you can't move away from step 1. I don't know what that asset is. All I know is that right now, if you do want to trade that shit, you need to wait for price to go below 34.44. Until it managed to do this, you don't trade that shit. You wait. Not interesting risk-reward ratio. I would suggest buying is interesting buying this thing is interesting, but you want to buy it into interesting prices area. And you can see that that range is interesting, but I would say, okay, we can definitely buy that thing and put a stop loss below those lows. But okay, if you want to do it fine. Okay. In a personal perspective, I would say it's not mature enough to buy, because the way that range really looks like an ABC structure. Because on top of the simple analysis we make in here with the Pro framework, I could take care of using Elliott wave filtering out there, which is a technical framework I'm generally using. So in terms of this, ABC comes with two impulsive waves, 1, 2, 3, 4, 5. 1, 2, 3, and 4 still needs a 5. So I would say in here, we just have to wait for a bit, as it seems that it's not mature enough to buy. So I would say not necessarily buying in here, but mostly trying to buy the bottom of that context. So I would say wait for prices to build themselves in here, trying to eventually reverse this thing. But anyway, you just wait for price to go either reaching that trend channel, but you need for prices to go below 3. Because that's what it needs. Wave 5 generally goes below wave 3. In terms of general technical extensions, generally wave C is reaching out to 100 and 127. So I would say right in here is an interesting price. $33.50 for that share seems a fair price. So I would say right in here, if you want to trade this in that time frame, in that daily time frame, and only that time frame, because right now you don't have to switch time frames. You make the analysis on the time frame you will trade on. No more switching. So all I would say for you right now, you put a damn alert in here and you get the fuck out. You can't move to step 3. You can't search for signal. You cannot even search for a technical framework, because right now prices are not respecting the step 1. Okay? Pascal, another set of 2 letters. GN. All right. Let's go for the fuck. Okay. So GN, yes, we're going to use GNS Holdings Corporation. Oh, yeah, John & Johnson. It's been a long time. All right. So let's go for John & Johnson. All right. Just having a look. What's the... Oh, they've been improving that thing. All right. So we just make sure a few standards are normal. We're trading things. So everything looks normal in here. I don't see random price analysis. So I would say in here, applying a technical strategy kind of makes sense. What's the context in here? All right. Mature trend. We clearly can see the market has been trending. Long trend. Okay. Pull back and making new highs. So I would say mature trending. So we're looking at range strategy and probably bearish range. Okay. I would just, yes. Oh, fucking mature trend. Yes. Okay. So I would say searching for bearish entries in a range perspective. But generally what we do out here is look at 127 extension out of market top. So I would say we use extended corrective waves out there. So I would say wait for a little bit more price rising in here. So the context doesn't necessarily seem mature to trade in here. But you're looking at selling entries, but I would say, nah, wait for better prices. Wait for a bit, okay? Wait for further prices. So right in here, I'll put an alert there and wait for prices to rise, okay? Wait for further contexting. Or you can do it differently. You know what? You can use that indicator to trigger alerts. So I would say right here, right now, as long as we don't touch the bearish framework, doesn't seem like it is really interesting to trade. So if you want to place an alert on this, you're just going to do this. You put Alt plus A, which is opening the alert system. You're going to use crossing. Yes, we do want to be alerted when we cross down the framework. And these are all the outputs, okay? You can declare on 50% framework, 50% context, and the trend is this, okay? It's the framework, okay? It's the little channel. This one, so you got support, resistance. This is support, this is resistance, and you got ups and downs, which are the boundaries of that channel. So, as for example, if you wanted that line, this is trend, resistance, down. Trend, resistance, down. This is that line, this one, okay? That line, that level is this. So the one we want to be alerted on is when we reach out to the support of the framework. So trend, support, up is the line we want to trigger the alert on, okay? Means that anytime the price will retrace back to there, for example, if we set that alert back in time in here, it would have triggered right in here. That would have been perfect. Trigger the alert in here, searching for signal in the lower time frames. Probably if I have a bought signal in here, we would have bought. Okay. Now we're searching for signals that this trend is over. So next time we get ourselves back to support, you can trigger on 50% if you want. I would say 50% is interesting already. That will give you odds that the trend's about to reverse. But I think in here is good enough. So you put yourself an alert in here, and you can expect the trend to do kind of this, putting one more side to the upside, and this is the next time you will sell. Not this one. You wait for another pullback, another rise, and the next rising entry is going to be the interesting one. So I would say in terms of steps, put yourself a fucking checklist if you want to trade an asset. Instead of just blindly waiting for something to happen, put yourself a mindset, a checklist, and you move step by step. If prices are moving accordingly, you check the step and move to the next one. So I would say my forecasting here is for us to retrace a bit, create a final bullish impulse, and selling that final impulse for a range structure in which we're going to target those prices, okay? So I would say this is maximum price area I would accept to be into. So I would say step one is for us to retrace back to 50%, showing that we terminated that thing. When we do that, I'm going to put an alert at the market top, okay? So retracing, crossing 50% will confirm that we found the market top, okay? So I would say close below the 50% of the framework. And then next alert is going to be above the market top. When I will have checked those two steps, I'll make sure that I am searching for interesting prices area. So whenever this alert will trigger, I will do what? I'll do an alert into signals, because any signal from sine wave or momentum is going to be something I will trade. So this is how I make sure, without having to watch out for that chart day by day, just make sure the market is moving according to my plan or not. So I would say a good alert right here will be this. Okay, G&G crossing down. Oh, fuck it. We can no longer do with candle closes. We could have done that before. Okay, shit. Ah, there we can. Okay, kind of mistake. So 50% framework with a candle close. So ons per bar close. Okay, that's how we do. Simple as that. It's not going to be open-ended, or it's going to terminate if we don't do that until December, 24th of December. That's 14, so I would say, can we go to 24th? Yes. By 24th, if we didn't manage to make it work, means no interesting. You're going to name your alert, okay? So GNG one day, put an alert above the market top and sell any signal above it. Pure and simple. All right? Text me whenever that shit triggers. All right. Is that simple or is that complicated? Trading has to be simple. It actually is complicated itself, but you can use tools that make it fucking simple. And you know, in that perspective, TradingView is really an help, and I think the indicators are as well. So use that as an advantage and make sure that you got an edge out of other traders that simply don't use those advantages. All right? We're going to stop this show right here. I'm going to just take a few questions you might have left to me before letting it go, and see you tomorrow for an intraday session. Yes. Oh, fuck. I made a mistake with that as well. So I'm really, really, really sorry about that. I might have made a mistake. I'm sorry. It's just I figured it out just today. That's kind of a proof that I mean, you'll see so many fucking YouTubers who's gonna make montage of their video. They're gonna cut what they don't want to say or what they said. They're just gonna make something that looks gorgeous. They're gonna make thumbnails and things like that. I don't even watch for things I upload to you guys. I simply open the fucking recorder, put the play button, finish the show, put the stop button, move to YouTube, upload, and that's a good sign. I mean, I don't even fucking watch what I'm uploading. I terminate the thing, I put the stop button, I put it online, and it's you guys who are figuring out when I do a mistake. So I think it's funny, but it's already a proof that I'm not cheating with you guys like most of the others are doing. No bullshit, no montage. We're just doing it straightforward, and I liked it that way. So anyway, I'm going to take other questions on the other video we've made with the tutorial on the major indicator update, because I asked you guys. So apparently you're all enthusiastic, so that's great. I would have pretty much liked if anybody had something to come up with, like kind of a critic, positive critic or negative. But I mean, critic at some point is just going to help me heading in the right direction. So I think I'm going the right direction. Just wanted to make sure. So you guys are confirming I'm going the right way. But if you have suggestion of improvements, just make sure you share them with me. That's me asking you to talk to me. So you say, okay, it's perfect, can't wait to get my hands on it. Great, I'm fine, that means I'm doing a great job. But I would like, if you have, I'm not forcing you, but if some of you guys think that I may add this, or delete this, or make this more obvious to understand, or things like that, if you have just suggestions, I mean, positive critic can be negative critic as well, no problem. But if you do have, that's the moment, because anyway, I'm 2 days or 1 or 2 days, I'm going to release that to everyone, and you must be aware that I'm not going to make updates each and every 2 days, which means if you want me to add or remove something, that's just right now you need to tell me. Otherwise, it will be too late, and you have to wait for the next update. It's probably not going to be until a month or two, and probably not until 2019. All right, so we'll see what you guys say tomorrow, and probably I'm gonna upload those new indicators until then. So I don't want to make promises I can't stand for. I'm not here tonight to make it, so probably tomorrow is gonna be the good day for that release. But don't mind me if I don't. As I said as an introduction, I'm fucking exhausted right now, and I really need some sleep. So I'm gonna do as fast as I can, but just want to make it well rather than make it fast. All right. See you guys.